equity. So what do I mean when I speak about equity? Equity is the interest of the owner in the net assets of the entity. Equity is the residual interest in the assets of the entity after deducting all the liabilities. So equity within a business is obtained from two sources. Number one, the owner of the business, as well as number two, the net profit. When I say the owner of the business putting equity into a business, I'm referring to the owner's contribution into a business, the capital that the owner puts into a business. Net profit, as I said, the net profit comes from the normal operating cycle of a business. So in order to understand how we calculate equity, we can use the following equation. Equity equals assets minus liabilities. Guys, as I said, equity can be seen as what is left over after deducting the liabilities. Equity is seen as the residual interest in the business after deducting the liabilities. So guys, this is referred to as the basic accounting equation. So this brings us to our second part of the video. This basic accounting equation, in every business, it has to be balanced. After every transaction that goes through an entity, it will affect two components of this equation. By using simple mathematics, we're able to determine unknown elements. So let's get into some examples using this accounting equation so we all have a better understanding. So firstly, I'm going to start with writing out my equation again. Equity equals assets minus liabilities. So let's get straight into some examples. B. Buckingham runs a small service business from home. On the 30th April, he tells you that his interest in the business is $28,000 and the value of his assets is $40,000. So guys, using a simple mathematics, I'm going to manipulate this equation in order to calculate liabilities. Okay guys, so what I'm going to do first, I'm going to write the equation in terms of liabilities. So it's going to be equity minus assets is going to equal liabilities. So he tells us his interest in the business is $28,000. Then he goes on to tell us that the value of his assets is $40,000. Okay, so guys, if we minus the 28,000 from our 40,000, we should get our liabilities amount. Therefore, our liabilities, if we minus 40 from 28, we get the amount of 12,000 equals our liabilities. So let's put this 12,000 back into our equation in order to determine if the assets, the 40,000 minus the liabilities, the 12,000 gives us our 28,000. So our assets being 40, 28,000 minus our liabilities that we calculated, which is 12, gives us, guys, 28,000, which, as the question said, being the owner's interest in the entity. So let's move on to our second example. Nix is the owner of Nix Plumbing. The following is a list of the assets and liabilities as at 31st May. We have number 1, vehicles, which is 54,000. Then we have equipment, which is 15,000. Then we have creditors, which is 6,500. Then we have debtors, which is 3,700. We have cash in bank, which is 4,300. And finally, we have a long-term loan, which is 20,000. So guys, the first part of the question asks us to identify assets. So let us identify the assets. Vehicles as well as equipment being a non-current fixed asset. Then you have your debtors as well as your cash in bank being a current asset. Our liabilities, we have creditors, which is a current liability. Our loan, we would require more information about this loan in order to determine whether it's a non-current liability or current liability. But for now, it's just fine to classify it as a current liability. So in order to calculate, the second part of the question tells us to calculate the equity of Nix Plumbing. So in order to calculate the equity, we're going to go back to our equation. Equity equals assets minus liabilities. So let's get the total. Of our assets and our liabilities. Okay, so 54,000 plus 15,000 plus 3,700 plus 4,300. Our total assets within the business is 77,000. So let's calculate our liabilities. 6,500 for our creditors plus 20,000 for our loan. That brings us to a total of 26,500. So now, once we have our total for our assets as well as our liabilities, we can substitute it into our equation in order to find out Nick's interest or his equity within a business. So let's do that. Our assets, number 1, 77,000 minus our liabilities, 26,500. Guys, that brings us to 5,500. 5,500 being the equity, or in other words, the interest of Nick in his business. So guys, this brings us to the end of our video. Thanks for watching. I hope you're able to have a better understanding of the elements of financial statements, the basic accounting equation, as well as the double entry principle. Stay tuned, guys, for more videos. And again, thanks for watching. Bye.